Hello everyone, Litz here from Chart Engineers. Today I will be explaining how we put the theory from the syllabus into practice. So in the previous lessons we have covered the following: market structure, liquidity, price and time, fair value gaps, price delivery and entry techniques. So all of these concepts is what I use to trade the markets, and in this lesson I will be explaining my strategy to show you how I use all of these concepts on a day-to-day basis. So like I said before, it's Litz, and I'll just be covering what my strategy rules are. So I focus a lot on lower time frames, but I also include higher time frames. So I just trade the foreign exchange markets, and the first time frame that I look at is the H4, and the H4 time frame will give me my bias and give me an understanding of where the market wants to move to. So for my bias and direction, I use the H4 time frame, and then I use the H1 for market structure and order flow, as this will allow me to understand where the price is likely to go. And then I look at the lower time frames, which for me are the M5 and M1, and I use those time frames to look for my breaker zone fractals, so the liquidity rates and breaker zones and market structure breaks. And I also take a maximum of 2 trades per day, and each trade I will try to TP, so take profit at Street R. So if I take 2 trades per day, I could either win both and have a total of 6R, or win one and lose one and be up for a total of 2R, or the worst case scenario is that I lose both of the trades and be at -2 for the day. So now I'll move on to an actual trading view chart and show you a couple of days worth of price action, and just show you how I would trade it using my strategy. So now that we understand my rules to my strategy, I will just start on the 15th of March, which is a Monday, and just show you a couple days worth of price action and how I would go about it. So firstly, I'll start on the H4 chart, and I will firstly just mark out my most recent market structure break. So here we've got a high and a low, so 2 lows here, and we see that price eventually breaks the structure low. So that's a bearish market structure break, and what this tells me is that price wants to go lower. And then I mark out any fair value gaps. So here we've got one, and we see that price comes to fill it, and what this usually means is that price wants to go lower as well. So we've got 2 confluences, and this is during Asia session. So I'd mark out any fractal highs or lows which are next to price, and wait for the fractal high or low to get either raided or we close above, and that would be a market structure break to the top. So we then see that price actually raids this fractal high, and this is during Asia session, so I'd not be trading it. So here we've got a liquidity raid, which just indicates that price will go lower. So we've got 3 confluences that price wants to go lower on the Monday. So for this week my bias would be bearish coming into the week. I then, before London session, would so London session will start at the next candle, 7 AM. I would just mark out the H1 raid, H4 raid, and then mark out any market structure breaks, your most recent one. So that's your most recent structure break to the downside, which indicates price wants to go lower. And then if there is any fair value gaps, you just want to mark those out as well. So from this wick till this wick, and the middle candle has a gap. So even though we are extremely bearish, I want at least 50% of this fair value gap to get filled. So here's a 50% line. Just mark that out in black. So that's the 50% line. I want at least 50% to be filled, and that's because there's a lot of liquidity in this area. So even though price is extremely bearish, I'm not gonna short straight away. I need price to come to my higher time frame area first and fill this level. So we can go to the 5-minute time frame, which is a lower time frame that I use. I use the M5 and the M1. So just see how price develops. So 7 AM. I want price to come into this 50% level. So we see that price comes to the 50% level here, and we also have a M5 liquidity raid here. So over here we've got a liquidity raid on your M5 time frame, and then I go to the lower time frame, so the M1 time frame, and I would mark out in my most recent market structure low. So this market structure low is the most recent one, and if price goes below, then that would be a market structure break, and that would indicate that price wants to go lower. So step 1 is the raid, market structure break. So let's just see if we actually get a market structure break. Yeah, so you see that this candle closes below, and that would be a market structure break, which indicates price wants to go lower. So step 1, raid, market structure break, and then the final step is to mark out your breaker zone. So once you get your market structure break, you can set your limit at this breaker zone with your stops above and your TP at 3R, and just see how price develops. See if you either get tagged, swerved, hit your TP, or hit your stop loss. So yeah, we get tagged in over here, and you see that price, once it tags you in, just continues to fall, and then we hit our take profit eventually. So our entry is 931, TP at 946. So we first had a M5 and M1 raid, M1 market structure break, M1 breaker zone, price came back, tagged you in, and dropped lower. So that's your first trade of this day after price reacted from a high time frame level. And then because price has already reacted from this level, you can delete it. So that's your first trade. And then at 10 AM I stopped trading. So here's 10 AM. That's when I'll stop trading. So I'll get off charts, and then I'm back at around 11:30, 11:45. I'm just waiting till 12, because that's when I personally start to trade again. So go a bit forward. Yeah, so this is a 11 AM candle, and I just checked the H4 before I start trading again. And you want to just mark out your most recent, fractal high or low, which is next to price, because price could either raid this low or break below, and that just gives them more confidence for shorts. And if we raid it, then that will tell us that price could go up. So then on the H1, just do the same thing, mark out your fractal low. So I've got this one marked out, same as the H4 one. And then you just wait till 12, so the next candle will be at 12. And what you want to do is just mark out your fractal highs and lows. So we've got one here, and one here. So if price raids these highs, I will start looking for shorts. So we've got a raid here, raid, your market structure low is this level, so we would need a market structure break to the downside over here. But we see that price continues to go up and we raid this fractal high, so I'll delete this one, not delete this one. We raid this fractal high and then go to the M1 time frame, and because we raided a new high, we would switch our market structure break to this level, so that's a new fractal low, and we see that price closes below it. So step 1 is mark out your raid, your market structure break next, and then you mark out your breaker zone. So market structure break, RTO, so return to the breaker zone, and this is after 12, yeah, after 12, so you can take this trade. Stops above the breaker zone, TP at 3R, and you just want to see how price reacts from this level. You see that price, so you enter at 12.23 and you TP in 10 minutes at 12.33. So both of these trades are basically identical, M1 and M5 raids, M1 market structure breaks, and then M1 breaker zones, and both of these trades are within our time periods that we trade. So as you know, I only take 2 trades per day, so these would be my 2 trades on this day, and that would be me done for the day. So I won both of these trades, so I'd be up a total of 6R. But so when I'm done for the day, I either just close charts or I will just continue to just analyze throughout the rest of the day. So I'll show you how price just continues to play out through this day. So I've got this low marked out, and if you are still trading, you can still continue to look for short, so just look for your M1 raid. We've got one here. We actually got a M1 raid here, so I'd mark that out, market structure break over here, and then your breaker zone is here. However, I would have taken this trade, but I would have closed it here, and that's because we're at the H1 and H4 low. So we are at this H1 and H4 low, so I wouldn't be comfortable shorting into that area, so I would not be taking that trade. And you see that on the H1 we actually close as a raid, and what this means is that price may want to continue to go higher now, so you can switch your bias. So then you're just waiting for your raid, MSB and breaker zone. So I've got it here. So that's your liquidity raid, market structure break, then your breaker zone. Then you can set your your limit here. Minimum 2 pips stop is what I do, so 2 pips, and then 3R target, and to see how price reacts once it comes back to your breaker zone. So we see that we get tagged here, and price just eventually will either hit your TP or stop loss, and here we see we hit our TP. So here's our breaker zone, here's our entry, so over here, and your TP over there. So that's 3 trades we could have taken this day, 3, 6, 9R. So yeah, you would ideally want to be in these high probability trades instead of taking trades in low probability areas like the short that was here or here, because we started to raid a fractal low. That's low probability. So this is a Monday done. So then at the end of the day, I would then just see how price develops. So clean the chart up a bit. So here we've got a H4 raid and a H4 raid up here. So price is just stuck between these two levels, and we've actually got a breaker zone here. So that's a breaker zone. We've also got a breaker zone over here on the H1. So price is just stuck between these two levels. But if you also notice that during Asia session, price is just accumulating. So just watch how it plays out. So price is just accumulating, and we see we get a big reaction from this breaker zone, and now we're coming into this breaker zone. So we can predict a reversal. So accumulation, manipulation to the top side. So let's go to 7 AM. So I would see this during Asia, see that it's accumulating. Then on the 5-minute time frame, I would know that we are in the H1 breaker zone, and I would wait for price to give me a long setup because of the H4 raid and the H1 breaker zone. So to see if price actually gives us any setups. Wait for your raid. So no raid there. No raid here. Do we get a raid here? So not here, but at this one we actually do get a raid. So price creates a liquidity raid at 9:15. Go to your M1, you're bullish because of the H4 raid and we're in the H1 breaker zone. So after the raid, so here's your M1 and M5 raid. So after the raid, you just want to mark your market structure break, and here we've got a bullish structure break, and then you just want to mark your breaker zone. So that's your breaker zone, and you want to set your limit over here at the breaker zone with your stops below and your 3 RTP. So we see that price is just ranging and slowly going lower. You get tagged in here at 9:50. Then price is just slowly going up, and we then eventually hit our TP. So this trade is valid because we entered before 10 AM, and then we hit our TP. So there was a lot of confluences behind this trade. The H4 raid, the H1 breaker zone, and the M5 and M1 raid, M1 market structure break and your M1 breaker zone. And then I would come back to charts at 11:30. So zoom in. So here at 11 AM, we're at this breaker zone now, and we could expect either a reversal or some kind of reaction at least. So then I would go to the 5-minute time frame, and because we're in this level, I would be comfortable looking for shorts because it's a higher time frame level. So I'd mark out this M5 raid, Then we see here, so it's 12 PM now. Or then after the raid, mark out your structure break. So that's a bearish structure break. And then you can mark out your breaker zone, and your entry would be here, so your limit would be here. You're not in the trade yet. And then you see that price comes back, tags you in, and it eventually will either just hit your stop loss to tell you that you're incorrect, or hit your take profit like it has over here. That's your take profit hit. So we've taken 2 trades in high probability areas, both of them being in H1 breaker zones, and then we got our lower time frame set up. So these are 2 trades we could have taken. Yeah, so these are 2 trades that we could have taken on this day. So I only take 2 trades a day like we said. So 2 wins on this day and 2 wins on this day. And yeah, so that's a total of 12 in 2 days. But if you are a bit confused about taking this trade and wanted price to go lower, then you will just have to wait for a new setup. So we see that price raids this high. To show you, so price has a liquidity raid or a bearish structure break after price starts reacting off the breaker zone, the H1 breaker zone. And then we've got our breaker zone here, the 1 minute one, looking for shorts. So here's your entry, you get tagged in there. And you see we get tagged in at 12:51, TP at 12:59. So that's another 3R in case you miss this trade or this trade. That's another 3R. Then let's see how price continues to play out. And then again over here, so you mark out your raids. So we've got a raid here, liquidity raid of this fractal high, both of these fractal highs. Mark out your market structure break over here, so bearish structure break, and then your breaker zone. Set your limit. With your stops above the breaker zone and your 3R TP, and you see that price comes back, tags you in, and then you hit your TP. So you get tagged in at 1:28 PM and you hit your TP at 1:47. So in this day alone we have taken 4 trades, so 1, 2, 3, 4, and they've all hit our take profit. So these are 4 consecutive trades that would have hit our take profit, but obviously it won't always be like that. You will take some losses, but these are just 2 days where price was just very clean and just behaving very well. But as I said before, as we take 2 trades per day, the best outcome is 2 wins. So we would be up 6R. The worst outcome is 2 losses, which rarely happens, and that would be -2R for the day. And a decent outcome, a decent day would be 1 win and 1 loss. and that would be 2R for the day. And as we see that using my strategy, there's a high volume of trades, so there could be up to 30 trades per month. So even if you've got a 50% strike rate, that would mean you take 15 wins at 3R each. So 15 times 3, that would be 45R, and then minus 15 losses, so 15R, and you would have a total of 30R per month. And that's a lot of R or percentage. So if you risk 1%, that would be 30%, and if you risk 2%, that would be 60%. Just trading a simple strategy like this, you can make a lot of R and percentage gain on your accounts. So yeah, this is basically my strategy, and if you've got any questions regarding my strategy, then just private message me or ask me on the Discord server, and I will be more than happy to help. So this is the end of the syllabus. I hope that you all found it useful and beneficial to your own trading. I would recommend that you watch the syllabus a few times and backtest each of the concepts that we teach, as this will give you a better understanding of them. Furthermore, make sure that you put in the time and effort to fully understand how we approach the markets, and we will also be releasing weekly recap videos which cover the previous week's trading opportunities, so make sure that you watch all of them. And we will also be releasing webinars which cover risk management, psychology, and any other trading related topics. So if you've got any questions regarding the syllabus or anything else, then just reach out to us in the Discord channel. You can send us a message on private messages as well, or you could just ask in the main Discord channel.